This is Going to Zero. I'm your host, Steve Metre, and thanks for joining me today. And our show today, it's time to get out now as you'll lose everything as one country is faced with doing the unthinkable. I'll show you what the risks to the markets are and where the opportunities lie in the show that makes you money. This is our Sunday show where we look at the technicals, momentum, and machine positioning to help you be a better trader and investor. Now, let's head over to Bloomberg where we picked the show up with China needs to relax its grip on the yuan, former officials say, because at the current pace, as you're about to see, the yuan is going to continue to collapse. It's headed towards zero, which is putting Beijing into the position of doing the absolute unthinkable. And what this is going to do is going to create risk and bubbles through the market, and that's going to lead to other opportunities, as you'll see. The relatively tight control by authorities has limited the onshore yuan decline to only around 1.6% this year, less than its Asian peers, but it's looking to move lower as the support is taken the form of a daily reference rate at which the currency is only allowed to move by 2% in either direction. And yet the yuan slipped to within a whisker of the weekend of its trading band several times in April as trading halts in some part of the yuan's trading market were also triggered in effort to keep it from outright collapse. But one of the problems, what Beijing cannot stop, is the money leaving its country. Here we can see currency outflows in April. This is the biggest move as people are dumping the yuan in a big way. They're getting out. They're looking to gold. They're looking to Bitcoin, dollars, anywhere but China. And here you can see this is devastating. And what this is going to do is force China to do the unthinkable, which is devalue their currency. This is going to, again, create ripples through the market. Bubbles are going to get popped, and other opportunities are going to show up in a big way. Now, let's take a look at the machine positioning. Let's head over to Goldman, and we're going to get into the details. I'll show you where those risks lie. If we look at the tactical flow of funds, CPI upside risk, and he said he received a ton of incoming questions to Scott Grubner this weekend heading into the CPI because there's a supply and demand mismatch right now as Friday saw the lowest shares traded in volume. And last week, we saw the lowest notional days of this year. And why does this matter? Well, non-fundamental demand will have more trading impact as he looks at the largest buyer of U.S. equities remains corporate America. They are now out of their blackout window. They're buying in a big way. CTA equity and fixed income demand is notable over the next week. We see them buying here. Now, if you're not familiar with what these machines are, they're price level momentum-based machines. As price goes higher, they trigger into buying programs and they buy more and more. The challenge right now is they're heavily leveraged to the long side. Even dealers, Gamma saw the largest increase in their data set. Liquidity saw the largest increase in their data set, meaning you need to sweep and sell. You've got buyers standing by. Even seasonals remain strong for the next month. When you factor early vacation and Memorial weekend schedule, it's kind of odd but important, Scott says. There are 4 working days after Memorial Days in the month of May. Do folks start their holiday vacation and summer rentals the week prior? Well, of course they do. Here you see 90% of the S&P market cap has reported earnings, and we are in peak buyback window now. $5.5 billion worth of daily demand until this. Mark your calendar a month from now. That would be June 14th. There may be some front loading ahead of the election, and actually you should likely expect that because, of course, there are concerns. There's going to be changes to laws in the future, maybe limiting buybacks, maybe changing, of course, what we see the taxation. So look for companies to front load this in a big way, and something that has been front loading, and we see the machines now went from overshooting to the downside, now overshooting to the upside. The machines, the CTAs, those risk parity, vol control funds, they are now moving quite long as they start to shoot higher, and that is creating a limit to their buying. And here we can see in a flat tape, they are buying global equities a little over 17 billion, 13 billion into the US, but look for that to slow down. And here you can see over the next month, buyers only 20 billion in global equity. So you can see we're hitting max limits here on this. the red line for the machines, 16 billion into the U.S. equities, and an uptape if we continue to see stocks higher. You notice the U.S., they're already near max long position. There still is move to run on the foreign side. Again, this should be creating an opportunity. If you're looking at the equity space and you're looking at machine positioning, of course, foreign equities right now, where it is likely going to be at. And here you can see CTA net equity exposure. This is estimated. This is from Metre, pretty much max long now across the board. This is going to be from most providers. And here we can see, looking at their own screens, again, this from Metre. If you're wondering why this is grayed out, these numbers are proprietary. We can't show them, but you've got to get under 5,066 on the S&P to see the machine selling. Friday's close 5303. That means you're not going to see any machine selling pretty much from any CTA provider anytime in the near term future. The challenge is they're not going to give us a lot of boost going forward. It's all going to be on the backs of retail now and corporate share buybacks to see if this market can indeed move higher. Let's take a look at our screens. Let's talk about then those risks here of a China deval, what that means for the markets. If you're thinking equity bullish, well, hang tight. It doesn't mean that at all. As you see here, momentum now is positive. The relative strength indicator is moving up now near overbought territory at 69. The MACD moving average convergence divergence, that's got a positive cross. Our own momentum time program. Now, maybe you like to trade these technicals, but you find yourself getting in late, out early, bouncing around with your trades is not working consistently for you. We take all these signals, we aggregate them together, and I run a proprietary overlay on it. It smooths the signals out, gives you better entry, better exit points, and across multiple time scales. We give you the daily momentum, the 1 month, 3 months, 6 months, so you get a big picture here. 11 consecutive daily buy signals. Now that was a pair trade on April 30th. The buy it open, that trade's now at 4.12. How do we do that? We leverage the machine position. You see we have some fast algorithms here, some slow algorithms that we run against the machines, and what makes our numbers better is we run a historical overlay. We show you when the machines are offside, where the opportunity lies, and then how to trade both the machines and the technicals to be a winner here. Now, there's great thing. There's links in the description below for both reports to get a 30-day free trial. You want to make money trading, you want to make money investing, just be positioned in the right side of the market. Well, you can see it. We deliver in a big way. In fact, over the last 2 months, what we have seen, our success rate in trades is somewhere around 90% between the two reports. That is unheard of. Let's take a look at this. We're bumping our stop loss level up. This is important. When markets are moving up and you're making money, lock that in. Upside target, who knows? We broke the all-time highs. Downside target, let's take a look at the 50-day moving average. Let's head over here, because what we can note is the volume profile, something we like to look at over the last 6 months. Well, we know that's beneath here. Now the question is, are there sellers above? Well, of course not. As we zoom into, let's see, that was the wrong one. That's the wrong one. Let's get it right here. Of course, buyers are underneath here. So where does the S&P go? Well, who knows? When you break out to new all-time highs, anything can happen. The next immediate pullback. So you know you're in a rally when you get a cross of a major moving average. It's a 50-day here in green. And at some point, you'll get a reconfirmation. That's why we're setting our downside target there and raising our stop loss level up. Now, let's look back here at the weekly chart, because I want to go back to 2015. What happened? We had a double dip. Now, some of this was on the back of Brexit, but China did a deval in 2015. So if you think the immediate thing is, wow, we're going to see a huge rally in equities, well, one of the risks here that you're facing is if there is a meaningful pullback because the market can't handle it, well, what you trigger is a bunch of machines selling. Now, that would create a better entry point later, but at the moment, that is not stock bullish at all. Now, let's take a look at the techs here, because we know big buybacks are in the big tech stocks. RSI at 66. We see momentum driving positive here. And MACD's got a positive cross. Our own momentum time pro, 11 consecutive daily buy signals. Again, we paired that with our machine positioning. We use that to trigger a buy it open on Monday. That was May 6th. That trade now up 3.3%, and we're raising our stop loss. Obviously, there's a decimal point missing there, but here we can see again downside target, the 50-day moving average, and we know momentum across both the major equity indices are long. Why? Our machine positioning tells us. See, we beat the machines. We told them, look, they're going to get long. They did, and we can look across the different scales of momentum. We see that there is strong momentum across the 1, 3, and 6 month windows. Let's take a look at the QQQ. First, 2015, what do we see? Same problem with the S&P, not stock bullish at all. And now with machine positioning where it's at, that could be a huge risk. You zoom in here over the last 6 months, you see the volume profile below. Where this goes, well, it just depends on where the sellers are at. Now, let's take a look at the Russell 2000. Many of you kept asking, please cover small caps. We got them. 15 consecutive daily buy signals, up 5.03% on our buy it open on April 30th. Again, using our reports to show you that 1 month pullback, or that pullback on the monthly of our momentum signal and the machine positioning. We pair traded them back in. Upside target, 6-month high, downside target, 50-day moving average. And we're going to again look at some other opportunities here. I want to go through the equity piece first to show you that the equity market is not friendly to dollar or to China's yuan deval should they do that. The other opportunities are tremendous. Wait till you see those. But let's take a look here at the Russell 2000. And what do we see with IWM? Is this thing looking good here? Just short of its 6-month high here. Let's zoom out to the 2-year chart, and we see a potential breakout coming. If it can get above the 6-month high, you're looking at a very quick potential run up here into that 230 range. This is what a bottom looks like, my friends. We nailed the short-term pullback here, gave you that entry point. Now let's go back out 5 years or 10 years from now into 2015. And what do we see? That would be right in here. And again, small caps did not like that. So again, what do we suggest you do? And that's raise your stop loss levels. Keep that in profit in your pocket when you can do it. All right, let's take a look now at the energy sector, which you would think might be bullish in a deval situation. No, it's not. Here we see 1 consecutive daily buy signal on our momentum time pro. We have no position currently holding this. We've noted to our subscribers how we think they can trade this, which is also really interesting because every time we see trades come out on reports, we put out videos and show you how to trade them. And then sometimes we come out and show you, go through the prior trades and give you tips on which ones you should jump into. Here you can see momentum clearly slowing a little bit. MACD's got a negative cross. RSI kind of slowed down here. Now, broadly speaking, one day it's up, but you can see this downward trend. We have a sell mid here on the 1 month window. And for good reason, we've seen the energy sector kind of back off a bit. Now let's take a look at what it's done over the 2015 period. Well, there you go. Look at that energy sector. Well, if that was due to the deval, that was not bullish for energy at all. I'll show you why. That is an indication demand is weakening and China had problems. But let's zoom in here. And what do we see? A potential run just up to here. We could be in kind of a stair step down. If you're looking to trade this, I would wait till Monday, Tuesday, maybe see if this rally on Friday continues or not. Now let's take a look at where the opportunity is going to lie in a devalue situation, because you'll note we talked about how currency flows are leaving the country. So what does that force China to do when it needs, of course, money? They have to sell their treasuries. Now, in a debt-based system, in a dollar reserve system, treasuries are like gold on an old gold-based system. China wants them in a big way, and they need to buy them because they need to drive interest rates down. Why do they want to do that? To get U.S. consumers to borrow and spend on Chinese-made goods. You got that right. Here you can see CTA demand for bonds. You want to trade with the machines and beat them. Take a look at the bond market over the next month in a flat tape. $41 billion in global bonds. Big tape up, 435 billion of bonds to buy. Even if bonds go down in price, 52 billion buyers. The machines are buying in every instance here. And how about this? We take a look at Metre. Over 109.69 on the 10-year to buy. Friday's close 109.16. What does that tell you? Short covering is coming. And how about this? Momentum is positive on TLT. RSI is at 56. MACD's got a positive cross. We're down only 3.1% on our trade. Now, mind you, we did not use stop losses on this when we started this buy it open back on March 20th. And sometimes people don't trade with stop losses. We think that is one of the biggest risks investors make. And so if you happen to get in a position where you're upside down on a trade that you didn't put stops in, just use the tools, use the report, dollar cost average in, and just be patient. That's the key. We'll see this trade turn around pretty quick. As Friday's close at 91.39, upside target at 93.79. Our machine positioning here, note on our fast algorithm says they should be long. That means, of course, there is a discrepancy. We're saying they should be long. They're short covering. That's opportunity. Here you can see momentum running 13 consecutive daily buy signals there on TLT. We noted this to our subscribers, and they are making money on this trade. Now, let's go back and look at the deval situation here. Over back in 2015, look what happens. No one thinks interest rates are going down and bond prices take off, and yes, they do. And then they settle before a huge move that goes into the pandemic. Now, let's zoom in. What do we see here? We were giving these signals right down here to our subscribers. That was incredible opportunity for them. And you see here price just hitting this downward line, and what that means is you see where the short sellers are at. You get a rally cross through here. What happens? You're going to see these shorts have to cover, shorts cover, short cover, short cover. This is a potential rally up into the 157 spot, and if it hits that and breaks out, watch out. Now you're looking to move all the way up to potentially around 109, and here you can see momentum turning positive as the market is starting to look at the bond market and saying, wait a minute, Fed, you're going to be cutting sooner than you think. How about gold? If gold's an opportunity, we'll take a look here in a second. We have no position on this. It's sitting right near its all-time high. We've got, in fact, the upside target at the all-time high. Downside target, 21-day moving average. Now, keep in mind that people in China, to preserve the value of their money, were buying gold, they're buying Bitcoin, they're buying anything they can get their hands on. So if the yuan starts to rally, well, let's see what that could mean for gold here. Let's pull up the chart, and what do we know? That gold sitting right, of course, near that all-time high, looking to break out and beat that. But let's zoom back here over the 10-year window, and what do we see in 2015? It went down, and it makes perfect sense when you think about it, because what happened when the yuan rallied, people wanted it back. So they sold their gold, sold their other things, and went back and bought into the yuan. That's what you should look to. So the risk here now is that gold could get unwound quickly if China moves into that deval situation. If you're trading that, well, by all means, make sure you've got your stop loss as a level on there. And does it work? Do we give you the signals to make money? Yes. Back on October 12th of last year, we gave a flag to our subscribers, said, look, this is a trade you should be making. You'd be up 27% right now. And the cost of reports, well, if you bought both of them, you'd only be out of pocket $550. What a huge opportunity, because we show you so many valuable trades here, not just as a trader, but if you're trying to manage your broader portfolio, your 401k, we tell you where to be and when to be it. All you have to do is trade it. How about GDX? Look at this. Momentum is still strong, positive 10 consecutive daily buy signals. This thing is shooting higher in a big way. It's maxed out almost across the board on its momentum. Upside target 38.19. Can you imagine? This has been a huge trade for our subscribers. Take a look at GDX. But let's go back 10 years. What happened? 2015, you got it, minus down. So there's your risk. Let's take a look here over the 5-year chart. What it was saying is the next big move for GDX is right up into this $39 range. Why is that? That's where you see sellers before. Let's zoom in, and what do we see? Just nothing but beautiful positive cross on the MACD. Little bit of oversold after Friday's move, but you zoom in and you keep noting buyers are below this market. Everybody wants to be long this market in a big way, and for good reason. And if you were a subscriber, you made a fortune on this. Look at this. We flagged this on March 4th on our CTA, March 1st on our Momentum Time Pro. Look at those returns, 27, 32. Again, you'd make a ton of money, and the price for the reports, virtually nothing compared to what you can make here. How about soybeans, where we think another big opportunity lies? Momentum is positive. We do know MACD's got a negative cross, but what happens, because we run a proprietary overlay, 19 consecutive daily buy signals on Momentum Time Pro. That trade up 2.49%. We came into that into late April, so great returns in a short period of time. Keeping the stop loss where it's at, moving that upside target right at the 200-day moving average. We're suggesting the machines are going to go long this thing in a big way. They need to do that. And let's take a look at soybeans, and we'll zoom out again. We'll look at what happens to the commodity space here. 2015, yeah, they went down. So be careful. We're going to look at some other opportunities here, but look at this. You see a bottom, and it rallied up into the supply zone. Pull back. We kind of said, hey, right in here is where you want to be buying in. We flagged this on our reports. It rallied up. It's pulled back into a supply zone. If this starts to look like an Elliott wave, well, it is. This Elliott wave is just trading between supply zones. Don't tell them that. They think it's some magical wave scenario. It's not. It's all about supply zones. Breakthrough here means you're going to hit that 200-day moving average, and then from there you're looking at a move up here into, of course, this 27.56. That would be a monster trade. I believe that would be the third wave of an Elliott wave cycle. Of course, that's the best one, and we give it to you without all of the difficulty. How about this? Dollar bullish. Well, that means dollar bearish, and we have a trade on UDN. It's up 0.44%. If you're not familiar with UDN, this is dollar bearish fund. This shows up on our CTA or on our Momentum Time Pro report, and you can see we have noted for 17 days it's been a technical buy, and that means we're going to see the dollar weaken here, particularly if the Fed gets into a cutting mode. Let's take a look at UDN here. Again, opportunity still available in this early stage. Look at the 6-month volume profile sitting right above it. What is that telling you? People around the world are selling dollars, buying other currencies, which is leading, of course, to what we see as big opportunity. Let's go back here to 2015. And what happens? You see the dollar still holds its value here a little bit on the bearish side. Let's go look on UDN. And what do we see? 2015, the dollar does indeed weaken here, rallies up a little bit and then heads back down. Let's take a look at one more big opportunity. This is Japanese yen. Now, why would we be interested in Japanese yen? Because it trades a lot very closely with the yuan, and there's a massive short interest on this thing, massive. And when they see that and you get squeezed, well, that's opportunity knocking if you're a trader. How about this? This thing is turning positive on its momentum with 3 consecutive daily buy signals. Now, we're not putting a position on this. We've kind of alerted our subscribers each time we see this on the report to be careful with this. Time is not there yet, but you're going to see a potential opportunity in the yen. Let's take a look at FXY, and what do you see in 2015? Boom, it takes off. Here you can see it. This thing is just downward spiral. Every time it tries to tick up, our reports try to catch it. That's why when you trade, you got to control risk. This is not the opportunity yet, but it's coming close and could be a big one. We'll zoom in here to the 10-day window. You can see it's still in the early stages of trying to form a bottom here. You zoom out till 30 days, sellers are still dominant, suggesting that it's not quite time to get into the yen, but that time is indeed coming soon. And of course, if you're a subscriber, we'll keep you appraised of that. And that is why the opportunity, if you're trading the yuan, get out of it and look for opportunities. Start controlling your risk on the equity side. You want to be looking at the bond market, foreign equities now, and of course, you look at these currency pairs, money to be made, put in your pocket. Again, that's why every Sunday we show you how to make money. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.